Hey, listeners, welcome back to the ValueHunt podcast. And today we have a really special guest, Chris McFadden, and he's the CEO of AFL Legal, a company listed in Australia in the ASX, obviously. So, yeah, Chris, why don't you say a couple of words and maybe explain what AFL Legal does for the people that might be coming across the company for the first time?
Yeah, sure. AF Legal is as it sounds, a legal group listed on the Australian Stock Exchange. We started off life predominantly focused in family law. So it was an existing family law business that was um, did an IPO in late 2019, I think it was, and and then did a number of acquisitions of some major family law businesses, then ran into a little bit of trouble and share price dropped a reasonable amount. And um, I guess the last little while we've been getting that right again. And we've also now started to grow again. So we're growing from that base of family law, but we've also done a couple of acquisitions in the areas of contested wills and estates and criminal law, but I'm sure we'll get onto those shortly. So that's pretty much what we do. We are a national business. We have around 120 odd employees, predominantly lawyers and legal support, but that's AF Legal.
Perfect. Yeah, I think that's a great introduction. And as you mentioned, I guess the name is pretty self-explanatory. But right now, I'm really curious to know why did you join AFL in the first place? How did the opportunity come across your desk, and why did you say yes in the first place?
Sure, sure. I'd been at a company called Ashley Services, and we'll probably get into that in some detail as we talk as well. I'd been there for about 6 years, and it was quite a turnaround and a rebuild of value for shareholders, which I'm sure we'll discuss. But really, I was looking for a new challenge. I just needed something something different for me. So I took on the interim role as CFO at AF Legal as an initial role. There were some common shareholders across both entities, including Peter Johns, who is the director of AF Legal. I had met him previously at Ashley Services AGMs and a number of others. And when I joined, they were well down the track on a proposed merger with GTC Legal, and eventually that didn't proceed. And I guess I saw the organisation. I probably saw some similarities to Ashley in some ways, in that it had gone through a lot of change. Its market cap had dropped from probably around 50 million at its peak in 2021 and was something under $10 million at that time. So I thought it might potentially be something that had the turnaround opportunity that I had sort of delivered upon in Ashley. So I guess that's what attracted me.
Okay. Yeah, obviously, Ashley is a big point of curiosity for me because it was such a success story. So I'm curious to know what were the key, I would say, things that you did in at Ashley that
Yeah,
really helped the story become what it was.
sure. Like when I joined Ashley, it was a difficult time. Like it was suspended from the ASX. It had numerous issues, largely related to its training operations. It was a business that was a labour hire business in the blue collar space, so warehousing and that type of stuff. But it also had a training arm, and training companies were pretty popular at that time on the Australian Stock Exchange. They had high valuations. There were some good and bad stories around training companies. Some people were doing the right thing, some people were not doing the right thing. Um, Not to say that Ashley were doing the wrong thing, but they made a number of mistakes that led to them dropping. They listed in late 2014 at a market cap of around 250 million. And by the time I got there, they were under $10 million. So
Wow.
obviously they had destroyed some significant value. There was a class action. So obviously the investors who'd been around for a while weren't impressed with what had happened, and understandably. Um, and really, when you looked at it, and I guess again, looking at it through a fresh lens, because I think everyone that was there through the whole journey, they were pretty jaded, and they just, they were almost at a stage of like, let's just get out of here and get rid of it. But looking at it with fresh eyes, you're able to see that the training division had been the main problem, and that at its core there was a really strong labour hire business. The company turned over at that point something like $300 million. A lot of it was in labour hire. Labour hire, low margin. And so it was the major part of the revenue, a little part of the profit. Training was a minor part of the revenue, but a major part of the profit. But with training sort of gone, and when you do the wrong thing in training, you lose your right to train. So they had lost their right, or they stepped away from certain markets. So what we did is we really reset the strategy to move, to basically to pivot away from training and focus on being a labour hire business first. And obviously, relative to what had been listed as a training company, it's a different beast. It's a low margin business, but we kept that training business on the logic that we could always rebuild that at some point down the future to give us some margin expansion opportunities. And I think that we then just went about delivering upon that strategy. We would, the strategy was doing what we said we'd do. So delivering revenue, profitability growth, rebuilding relationships with the investor community, and also with the banks. Like Ashley at that point was largely without a banking partner, had some transactional banking, but nothing more. So I had a
Mm-hmm.
lot of, regular meetings with investors and bankers, just going through our results and saying, this is what we've done, this is what we're going to do. And, just in a way, just ticking it off. And eventually the banks, you build the trust and confidence back in the company. And we were able to establish a bank facility. We used that then to make a significant acquisition in the labour hire space, more around construction based infrastructure work, which again, pretty solid pipeline of work in Australia at that point in time, and better margin as well. And then we followed that up with a training based acquisition a year later, which again gave us some margin expansion. And all told, that exercise, like in the time that I was there, by the time we got to early 2022, so 5 years or so, that 8 million that it was when it relisted after suspension had grown to 110 million. So it was a very successful exercise for us.
Nice. And for some people that might not already know this, you actually worked at the third public listed company, and it was actually the first one you worked at. So
I did, yeah,
why don't
yeah.
you guide us to that story? And yeah, maybe that's a bit more unknown, your
Yeah,
background.
sure. My background, like prior to even Ashley, I guess, I'd predominantly in CFO and senior finance roles, and a lot of those were in retail organisations. And I think that retail sector is a good background for many industries, in fact. And I think that that whole retail is detail logic. It definitely holds true. And I think what you
Mm-hmm.
learn there actually carries you a long way. So my first ASX listed role was CFO and company secretary of a company called Ross Human Directions. Had a fairly high profile owner, 50% owner, who had grown the company to around 400 million turnover. And it was predominantly, again, a labour hire business, if you like, in the white collar space. So it was more
Mm-hmm.
around call center staffing, and office support was probably its key. I had a little bit of training as well, had a little bit of recruitment, but again, that was where I started, and I was there for a few years. It was, yeah, as I say, $400 million sort of business, and eventually, after I'd left, it was sold off the stock exchange to another player in that field.
Okay, got you. Nice. So now getting a bit more into AFL, Peter Jones is one of the main shareholders and also a member of the board. So I'm curious to know what has been his role in the company, and especially regarding in capital allocation.
Yeah, sure. Capital allocation options probably have been fairly limited for us while we've been focused on our growth strategy. So I think we'll
Hmm.
touch on that a little bit. But Pete is really, he's my sounding board on most things, and we work closely together. We probably speak a couple of times a week, emails and texts even more often than that. So we work well together, and that's a real key. And he's a yeah, I enjoy working with Pete. And in some ways, like the Armstrong legal acquisitions that we'll no doubt talk about, they came in some way through a link Pete had back to GTC. So after the GTC merger transaction had fallen over, Pete was still attached to them in a common investment that they both had. So So he is good in that regard as well. He had those links back to GTC, which ultimately led to those acquisitions, which are already very good for us. And I think in time you'll see their true transformational nature,
Mm.
as they give us the growth opportunities to leverage our relatively fixed cost base.
Nice. So, as far as I understand, Peter is a big asset, but one thing that also came to mind is that he's basically buying every single share he can of the market, at least from what I can tell. So, could this potentially be a liability if investors choose to withdraw from his fund, West Ferry, because that would make him a forced seller at some point? So, have you ever talked about this?
Yeah, yeah, Peter and I have definitely spoken about this. So I've probably written it down a few times. So I'll try and summarize his thoughts here. He would say that that's not impossible, but it's very unlikely. He's saying that the AF legal position in West Ferry accounts for around 8% of the West Ferry assets, and
Hmm.
around 50% of the units in West Ferry are held by Peter and his family, or by four other key investors who are also co-owners of the West Ferry Management Company. So they're very long-term investors, and historically
Mm.
there's been very low turnover in the fund. And in many ways, Pete treats AF Legal investment like a private equity position, and knowing that it's not a source of liquidity for many years. So I think that, yeah, it's not impossible, but it's quite unlikely.
Got it. Yeah, I think that makes a lot of sense. Now, talking a bit more about operations, what is your acquisition strategy going forward? And I guess what have you learned from the recent acquisitions, as you mentioned before? You have done a couple, so maybe we could talk a bit more about those.
Sure. And I think, like, in terms of our acquisition strategy, I think, yeah, it's a good way to do it. I'll illustrate based on the two most recent acquisitions that we did in 2024.
Mm-hmm.
And effectively, those two acquisitions saw us acquire the two divisions of Armstrong Legal, being contested wills and estates and criminal law. We also picked up some residual family law team members that they had in New South Wales, and also the Armstrong Legal website. And we picked up all of that for around $6 million. And that compared to the original valuation that was contemplated at the time of the merger, which valued the GTC assets above $20 million. So we got the best parts of that organisation for around 30% of what was originally proposed. So the assets
Mm-hmm.
that we got weren't exactly the same, and I don't know the assumptions that drove the initial valuation back in mid 2022 or whenever it was. But hopefully, what I'm trying to illustrate here is that we look for quality sometimes in amongst other assets that we don't rate so highly, and by doing that
Mm-hmm.
we find the real value. And I think that these transactions, it probably shows our hands as to what sort of acquirers we are. We're opportunistic acquirers, and I expect that that's the approach that will continue going forward. So I think that, other than that opportunistic approach for acquisitions, I think that Armstrong Legal is really a foundation that we can build upon for years to come. Contested Wills and Estates continues to grow its team already, and that business hasn't missed a beat since we got it. And we have made appointments of leaders in two new locations for criminal law. The criminal law division previously was, back in the early days of it being owned by GTC, was pretty much national, and its
Mm-hmm.
turnover was in excess of $10 million. By the time we got it, it was New South Wales based, and around more closer to $2 million. So we are basically looking to re-establish a more national presence and to grow it. And already we have someone on the ground in Victoria. We've made an appointment in Brisbane as well, and recently just made an appointment in the ACT, so in Canberra. So that will be important to us. And then I think the only other area for us as well is for the existing family law business. Acquisitions will play a role in locations where we feel it's necessary. So if it's a particularly remote location, maybe like a Townsville or an Adelaide that is not near what we have, we may need to acquire something to move into those markets. And it equally, the parochial nature of those markets might lend itself to acquiring something. So I think they're the acquisition opportunities that we would look forward to at some point.
Mm. Uh, One thing I would like to understand a bit better about the legal business, because obviously it's not exactly the type of business I deal with every day, is how much does the, let's say, presence in the territory actually matter? Because it feels to me that most of the law work you can do can be done from pretty much anywhere, as long as you have like a good understanding of the laws, right? So how much is it like marketing, and how much is it actually like mandatory to be present in the territory?
Yeah, I think it depends. Like the answer is always for most things, it depends. Um, it like they we definitely like, and I'll use Darwin as an example. Darwin is a very strong business for us. Has We have probably the best lawyer in town in family law,
Hmm.
and the demand for her services are very high. Um, but we struggle to get lawyers in Darwin. It's a remote location in Australia. It's hard to get people to go there. So we do support that business from other locations, and you can do that
Hmm.
to some extent, but from time to time, you still do need to be on the ground there. So whilst I would say, and I'm drifting back to the half year results, I remember that something like 20% of the revenue out of the Darwin business came from lawyers located outside of Darwin. But
Hmm.
they do still have to go there from time to time. Sometimes the client needs a face to face. Sometimes that can be done with the local people. Sometimes it needs to be the lawyer that is working on their matter as well. So we do fly them in and fly them out. So there's a bit of that as well. So um, yeah, I think you can never underestimate how much you need a presence. And I think, to illustrate again, there's an area in Sydney in the Northern Beaches, like, which is it's outside of the Sydney CBD, and it's
Hmm.
as it sounds, it's a beach based area, and people from the Northern Beaches tend to stay on the Northern Beaches. They don't really go into the city. So
Hmm.
again, for us to have a presence on the Northern Beaches is really important to us, because you really capture that market. And I think that's something that we will look at going forward as well, because there are, in all locations, there are areas like that that can be really growth opportunities for us, in that when you open in those locations, you grow the pie, if you like, because you're not detracting from work which otherwise would have gone to the city or some other location, because it's, at the moment it would have been going to other local players. So I think that there definitely is, in terms of family law particularly. And I think, if you think of family law, people are time poor in a lot of ways. They have children, and the responsibility for children may have changed in the breakdown of a relationship. So they want to, by and large, they like the idea of it being closer to home. So I think that our logic in our growth strategy of opening complementary family law practices that feed off our existing network, by expanding into various suburban locations in major cities, I think that's a great growth opportunity for us, because I would look at our Northern Beaches operation, which has probably been going 3 years or so. And
Hmm.
it's a fantastic business for us. It just grows constantly, and we add team members, and its profitability is good. Rents in those locations are much better than CBD, so it is a real opportunity for us.
Okay, got it. And we also mentioned that you didn't have as many capital allocation opportunities in the past, but looking into the future, how will you prioritize allocating capital between acquisitions, dividends, buybacks, or further investments in operations?
Yeah, again, like I said previously, I guess that capital allocation options, whilst we're focused on our growth strategy, will always remain slightly limited. I think that
Hmm.
further investment in operations definitely will require capital. So, be that opening new offices or employing larger teams, that will be probably priority number one. Capital will also go down to paying our debt, so we will look to reduce our debt levels, and then beyond that, opportunistic acquisitions will play a role if and when they arise. And outside of all of that, dividends, buybacks are always possible as a as a backup to all of that. And then obviously that's something for the board to determine at any appropriate time, I guess.
Got it. Perfect. Now, talking about investments in operations, one of the biggest investments you've done in the last 12 months, I would say, is Project Titan. And so, why don't you guide us through how is that going and what will be the key tangible impacts of the project when it's completed?
Yeah, I think that we were on you know, we were largely on one platform in the family law business. When with the Armstrong acquisitions, we brought in another platform, so we now have two practice management systems. I think that
Hmm.
they would say that theirs is not really appropriate for their business in some ways. And I think that our one as well is, there's always acquisitions in this whole area of software and systems. And we now found ourselves on a semi unsupported product that, is being phased out through an acquisition. So that led us to go to market and look at opportunities. We have come up with Adherent as our solution, which is a very best of breed sort of solution, and I manage as a document management system. It'll mean that in the end, we'll have everyone on a single system. So everyone on a single system just has so many benefits in terms of efficiency
Mm.
and just saves time and money. And we have a support office based out of India through a third party provider as well. So if they're dealing with one system, it's just simpler. I
Mm.
think that the user experience in this new system will be a step forward, a significant step forward. I think that the ability to record time via remote working through mobile apps and things like that just makes it so much easier for them. The document saving and managing sounds like not much, but like if I could say one thing that I hear so much noise about in our organization, it's the saving of documents. Apparently
Yeah.
it's quite the process, and the number of keystrokes that it takes, the time that it takes, all of those things are going to be reduced dramatically. And I think that beyond that, there's all sorts of workflow design and streamlining processes, matter management, time saving opportunities. There's so many opportunities for us, and I think that the migration also will bring across 5 years of historical data, which is really helpful to us as well, all into the one system again. So I think that yeah, it's going to be something that will be. I do believe it will be a real competitive advantage to us because I think we are of a scale that we can justify the investment in it, whereas I think that smaller operators they couldn't go for a product like this.
Got it. Makes sense. And speaking of software and technology, I know AI is a hot topic, but I think law practices will be greatly impacted by AI. And I wanted to know what's your take on this and what impacts have you seen already in the business?
Yeah, yeah. I think like from a point of view of AI in the legal profession, if you like, it's still in evolution. Like it's a highly regulated environment in which we operate.
Hmm.
So the guidance coming out of the law societies in each state is very important to us. So I think that, we continue to monitor that and look for the opportunities. But you know, the possible opportunities are things like, transcribing and summarizing meetings and calls. I think that the file note creation, which is essential to the professional management of a client matter, the time saving aspects of that are significant. The ability again to save files, I think again, the opportunities to reduce time and time spent by expensive lawyers, if you like, to do that, and to automate that process is definitely significant. I think just general, all of the manual administration work, the more that we can automate that process and take it out of the hands of people, I think that will be better. I think the actual aspects of the law and drafting and things like that, I think that's when you get into a bit of a dangerous area to think that AI would be involved in that. Not saying that it's impossible, but that would be something that you would only do the clear direction from the regulatory authorities as to what is and isn't sort of allowable. But I do think that in terms of the more mundane activities that the lawyers do spend a lot of their time on, I think that yeah, we should be able to see significant improvements and time savings there.
Cool. Okay. Um, And also, one other thing that I think is crucial to this story is are the challenges you had to manage since you joined. And so, what were the key challenges? What did you learn from them? And which ones are you happy to say? Okay, we've gone through that. Now that's a clearer story, I guess. No.
Yeah, yeah. I think, obviously, an organisation that had gone from $50 million to under $10 million, it creates certain pressures on individuals in that organisation, and maybe the way that some people handled that pressure on themselves, sort of they translated the pressure on to others in the organisation. So I think when I joined, I found an organisation that had a lot of it needed significant rebuilding of morale. I think morale was very low. There are a lot of fractured relationships with the former principals of some of the previously acquired entities. So the people that had sold their businesses into AF Legal were still involved, but the relationship had since sort of fallen apart. And I
Hmm.
think that the one thing that I announced sort of when I came into the CEO role was, to really go down a people first focus. And I think that that has really paid dividends in a significant way. We undertook an external survey when I first moved into the role through an organisation called Great Place to Work, which is it's
Hmm.
an international organisation that does this. And we came up with a result of 53%. So um, people were saying, you're not even a good place to work, let alone a great place to work. So it was clear that there was a lot to do. So um, just looking after your team members and putting in more equitable processes, and showing that you care and that you are considerate of them and that you listen to them. I think all of those things have made a hell of a difference. We certainly looked at remuneration as well and bonus schemes and things like that at the same time, to bring those into a more equitable sort of situation for our employees. And I think that we did the same survey a little over a year later, and we had lifted from 53% to 84%. So even Great Place to Work said, you don't see that sort of improvement in that sort of time frame. They said it was something that you'd normally see in a 3-year process. So I think that we've really seen that the AF Legal group and its various legal brands is indeed a great place to work, and our people are telling us that. And I would say that, has it improved since then? I think it probably has. I think it's probably better even. I think that the acquisitions as well. I think the teams that we brought across from Armstrong as well, they needed a change, and they've loved the change. So I think it's been really positive. Relationships with all of our leaders, be they the acquired leaders through the acquisitions or otherwise, I'd say that those relationships are as good as they've ever been, or better than they've ever been. And I think that you see the end results of this. So since early 23, we've seen consistently improving results, and I think it's in large part down to the fact that that our people are enjoying what they're doing. They're enjoying coming to work, and I think ultimately, when they're in a good place, they deliver a better service to the client, and you deliver better service to the client, you do better. So I think that's been the big thing for us, the big challenge that, and I would say it's largely overcome, but you can never be complacent on that sort of thing. People are people, and you can't assume one size fits all. So you've always got to be keeping an eye on it.
Nice. Yeah, I actually was very impressed with that because I guess it isn't that usual that in turnarounds people are at the center of the discussion. I guess it's more around the numbers and like, are you hitting certain targets or not? So That was a very interesting point when I studied AFL, and you touched a bit upon bonuses and how you are incentivizing these people, and I'm curious to know what types of incentives have you designed to make AFL a more meritocratic organization and also achieve the intended results as well as compensating appropriately the associates.
Yeah, I think previously, like I think when I first joined, I sat through some performance reviews, which also talked about. Um, I think when I did it, I had some bonus calculations in front of me as well. So we were talking to people who had done an excellent job, and they were seen as some of the best in the organisation. And then I would look and I'd go, yeah, but they got a bonus of like $1,200 last year. You know what I mean? Like it hardly seems like it's been
Mm-hmm.
recognised. So I think that
Yeah.
the bar had been set far too high for people. So people were being set these targets that were unachievable. And what we did, and I won't get into all the mechanics of it, but we basically
Yeah.
reduced the hurdle. So we pulled it down by 10%. And then in terms of what we pay the individual, um, we increased that as well. It was previously going to say it was 10 or 15%. I can't quite recall, but we took it up to 20%. And if that's 20% on a quarterly basis, and equally, if you
Mm-hmm.
do it on an annual basis, you can get another 20%. So you can actually get 40% as a lawyer. You can get 40% of everything you bill above the hurdle rate. So, if you consider someone who maybe bills, their target might be $500,000 and they may bill 650, so they can get 40% of 150, so they can get $60,000 bonus, be it quarterly and annually. And I think the other thing that we are looking at the moment as well, which we are talking to our teams about, and particularly our senior leaders, is a long-term incentive scheme that will be tied to both their own area of responsibility. So if you are the practice leader of, let's say Canberra, that you'll be targeted on the Canberra results, but equally there'll be a portion that is tied to the national result as well. So I think that that's something that we're looking at putting in place at the moment. And one last thing, just while I'm thinking
Yeah.
about the whole improvement in people, one other metric, which is not even a metric really, but just one other pointer to how successful it's been, we probably have 7 members of our team who have rejoined us. So people who at
Mm-hmm.
some point decided to leave because maybe they weren't happy, or it may have been other reasons, but 7 of those people have come back to us. And I think that, I just know when I go out to functions and various industry events, if you like, which we do from time to time, I do talk to people who previously were with us, and they say, oh, they comment on the fact that they're hearing really good things about the organization. So, it's very powerful, and it's a tangible thing in that it makes it easier to attract people to your organization when people are hearing good things. Obviously, if they were hearing some of the negative stuff that used to go on, people are going, well,
Yeah.
I don't want to go there. Whereas now they're going, no, no, this is a good place to be. So it's definitely made a big difference for us.
Right. Yeah. Definitely. So it was not only a turnaround, as we said, in numbers, but also in how people perceive the business and the employees. So we've talked enough about turnaround. So I'm interested in knowing at what stage or phase of the turnaround is AFL currently, and yeah, basically when you came in, it was clear that it was much worse. So
Yeah.
maybe guide us through that.
Just briefly, I would say that we've definitely gone through the stabilisation and the turnaround phase. I'd say that is
Mm.
complete, and that on the back of the Armstrong legal acquisitions in particular, and the expansion into these complementary areas of law, I'd say that we're now entering an accelerated growth phase. And I think that accelerated growth phase, through some of the growth potential that I spoke about in relation to criminal and contested wills and estates, the way that our business model works with a relatively fixed cost base, like we don't have to add on central resources for every additional dollar of revenue. So I think you'll see that as we grow revenue in those organizations, but also in family law as well, I think you'll see that our profitability will definitely lift through the coming years.
Got you. And speaking of profitability, what kind of margins do you expect in the next few years if you hit, say, a certain critical mass that enables you to, as you said, unlock that operational leverage?
Yeah, I think, like probably better is all I probably really want to commit to at this stage. But aspirationally, I think we'd like to target a net profit before tax attributable to shareholders margin of 10%, and I think that's something that's achievable in the near
Hmm.
term. So I think that's our aspirational target for the short to near term.
Okay, got it. And what's sort of the longer term vision for AFL? Originally, it was a family law roll up, now expanding into criminal and contested wills. So, do you have a clear idea of what the company will look like in 5 or 10 years? Obviously, this is a very loaded question, but still, I know
Yeah,
you
yeah.
you
Sure.
can make.
I think if you go back, if anyone wants to go back and look at any of our presentations in the last 15 months or whatever, I think our growth strategy slide that has been in all of those, I think it's more relevant now than it was even then. So I think that it hasn't really changed, and all of the growth opportunities that we have are outlined there. I think if we continue to successfully deliver against that strategy, we're going to see revenue grow relatively quickly, and that's going to see our bottom line profitability deliver improved returns again. As I spoke, we've got a relatively fixed cost base, so the flow through should be significant. And I think that 5, 10 years, whatever you want to say, we will be a much bigger and more profitable organisation in the years ahead. And
Mhm.
ultimately, we'd like to see ourselves as the premier provider of personal legal services in Australia. So any further expansion will probably need to fit within that definition. So, for example, in terms of areas of law, personal injury, not something that we would consider, but
Mhm.
greater expansion into the process of estate planning. Well, that's probably natural. That probably makes some sense for us, and I think that there will be others, but I think at the moment we've got our hands full just betting in the Armstrong acquisitions and growing those. But I do think that at some point in time we will look to expand into some other complementary areas of law as well.
Hmm. While you were talking, Chris, I was just reminded of the fact that your background isn't exactly law, as far as I'm concerned. So maybe you could guide us through some anecdotes of how did you, I guess, get familiar with the business and the industry. So yeah, maybe that could be also interesting topic.
Yeah, I think like, yeah, and I'm, even to this day, I'm not going to claim to be an expert on law in a lot of ways. And I think that we have a lot of lawyers in our organisation, a lot of senior lawyers, and I think that what the organisation needed was someone with a commercial sort of business view, and I think that's what I bring.
Hmm.
But
Right.
I do lean heavily on our senior leaders in our organisation. I think that um, maybe potentially one of the criticisms previously was that the centre of AF Legal maybe micromanage the businesses a little bit too much,
Mm.
whereas I give the practice leaders a lot more autonomy and allow them to run their own businesses. And we've established what we call a oh, LLT. I should know what it means, shouldn't I? It's the legal leadership team. Sorry, I had a bit of a blank there. Legal leadership team,
Yeah.
our most senior lawyers, who really they are the group that are charged with looking at what are the issues that are facing the organisation and what are the solutions for that. So, I talk to them on a regular basis. I also I would say in some ways, he's almost a mentor in this regard. Justin Dowd, who is one of the former principals of Watts McRae. And Justin is, I don't think he would mind me saying, he's semi-retired. He's down to, more or less around a day a week. But, what Justin does for our organisation is invaluable. Like I can go around to the different practices and spend time with people, and that's all very positive. But I think from time to time, they also need someone who can talk to them about their legal challenges that they're facing. And Justin does a great job, in that regard for me. So he will travel around and talk to them as a peer, someone who's been through the issues that they face, and then he can, in some ways, suggest ways that we can improve that to me as well. So I think, yeah, Justin plays an important role for me, and there are others, a lot of other senior people within our organisation that I definitely lean on in relation to the legal background. Because as you say, I'm a retail labour hire background, and before that I was an electrician. So it's quite a different background.
Yeah, yeah. Actually, I wanted to get into that, and I feel like it's still a relevant skill, right, in this business because it's a people's business, and so hiring the right people is really crucial. So that's an
It
interesting
definitely is.
background to have.
It definitely is, and I think that like if I sometimes people say, "What's your biggest challenge?" And I say that our biggest challenge, our business is based on people. So finding quality leaders, quality lawyers, quality individuals, that's always our number one challenge. And I think that the team that we have now, I'm really happy with it. I really like, even when yeah, and I do get quite involved in recruitment, particularly in the more senior roles, and I'm always conscious of, is that person the right fit for this organization and for that team? Because they could be the best lawyer in the world, but if they don't fit, it's only going to cause problems. So I think that's a real constant focus of mine for sure.
Got it. Nice. I wanted to ask you more in terms of financials and yeah, future prospects. What is the single metric that you would like investors to hold you accountable for over the, let's say, mid to long term?
Yeah, I think historically AF Legal used to present profit numbers all different sorts of levels. It had EBIT, it had EBITDA, it had all manner of adjustments and normalizations. Think we've been very clear on our move to focusing on a net profit before tax attributable to shareholders. So effectively after the minority interests. So that's the one we focus on. I think we still haven't really got away completely from normalization, which is unfortunate. And I think that's definitely something that we want to do, but there are, we are still going through a few various legacy issues which require a bit of normalization. But I do think that at the consistency of our approach on that is probably better than it used to be. I feel that it used to change from period to period a little bit before, so I feel it's much more consistent. And then when you view the business on that basis, I think you can look and go, the first 2.5 years from listing, it lost four or $500,000 at that level, and in the next two and a I'm not sure where we're even at, to be honest, about two and a quarter. We've made $2 to $2.5 million. So it shows that, there's been a significant shift in what we're delivering against that metric, which is our preferred metric, if you like.
Got it. And just to finish the questions from the audience. So the valuation of the company is undemanding, to say the least. So I'm curious to know if you ever received any bids to go private or to get acquired, and if you would leave that door open in the future. And also, what might investors be missing or being impatient for?
Yeah, I think that we definitely believe there's a benefit in remaining a public company. So we've got no plans
Mhm.
to go private. So that's not something that we are considering. And I think that our results have continued to improve. Revenue's improving, it grows, our profitability improves. Is it a little bit disappointing that the share price sort of still sits where it was a couple of years ago? Yeah, it is a bit.
Mhm.
But if we keep doing what we're doing, the valuation will look after itself. And I think that
Mhm.
um, it's a little bit. I'm a little bit boring and repetitive in this regard, but I think if we just keep delivering quality results, the valuation will definitely look after itself. I think that probably at the moment we suffer a little bit from some of those historic legacy issues. I think, whether it be some of the legal defense fees that we've sort of talked about lately, also the complexity around our Project Titan investment and the way the accounting rules make you sort of deal with that, which doesn't allow for much capitalization on the whole software as a service sort of logic, because it comes down to where the server sits, which to me is madness. But the accounting rules are accounting rules. It's not the only
Yeah.
crazy accounting rule there is. Um, but I do think that once that's all behind us, I'm sure that our results will do the job for our valuation. I'm very confident in that.
Cool. Awesome. So now I have sort of more personal questions, and
Mm,
I would like to know, how was your childhood, and what passions did you have back then, and why did you pursue them or not? And also maybe you could comment on your early beginnings as an electrician, because I feel like that's a very unique background to start with, and then pivot to
yeah,
say retail and yeah, finance. So
yeah, I think you're right. Like I definitely I started out as an electrician when I first left school, and probably I'm probably one of the few ASX listed CEOs who can put power put power outlets in the boardroom if the need arises. So there's a skill that's a cost reduction tool that I have. My passion is my family. I'm my wife of over 30 years. I've got a couple of daughters as well, and now I've got two young grandchildren, and we all live relatively closely on the northern beaches, ironically in Sydney, and that's my passion. I think that my background as an electrician, it probably does show some of my character in a way, like in that whilst I've gone on to finance roles and now a CEO role, at my core I'm a very practical person who gets stuff done. And I
Mhm.
think that that's what you see, and what you see is what you get. So I think that my practicality is something that probably comes from that background and my upbringing as well. And I think that yeah, I think that to me is getting stuff done is an underrated skill. I think in many ways, I think we focus on strategy and things like that, which always has a place. But if you don't get stuff done, nothing really matters.
Yeah, yeah, exactly. And I think this is a topic we already talked a bit about in the interview. But how do you balance creating shareholder value with building a fun and happy workplace? And is this a balance in the first place?
Yeah, I think like this is probably the logic behind our people first culture in a lot of ways. In that our teams don't sell a tangible product. They're not selling an item, if you like. So they deliver a
Mhm.
personal service to our clients. So the better they're feeling, the better that experience is going to be for the client. So like if you've got people who are not feeling great about things, then the client experience is probably going to reflect that. So the happier that we can make our team members, the better that client experience will be. The better the client experience is, the better that we will do as an organization. So I think the takeaway is that in most organizations, but particularly so in personal services or professional services organizations, that a fun and happy workplace, it definitely does deliver greater shareholder value. I think it's key.
Mm, got it. And I think you already touched on this previously also. But what are your main motivations in business and life? And I'm guessing your family is one of them. But
Mm.
other than that, what else you have?
Yeah, I think like my motivations in business and life are really treat people as you would want them to treat you, and to treat your family. I think that's the most important thing to me, and to make people, everyone that you deal with in business, to make them feel valued, respected, and safe as well. I think they're all very, it's all very gentle stuff in a way, but I think it's really important, because I think the business world can be very aggressive, but I think it need not be.
Hmm, got it. Got it. And what do you enjoy doing outside of work?
Yeah, I think you touched on it before. I think spending time with my family definitely is a big one. Traveling, so I definitely enjoy traveling. My wife and I, we especially enjoy traveling to Greece. My wife is of Greek background, so we tend to go to Greece fairly
Nice.
regularly. And just living by the beach, spending time around the water. I think I find it. I live in an environment where I'm close to the beach and close to nature, and I think that's really important. and I'll get a little bit different here, but my focus in life is the internal rather than the external. So like things like meditation, spirituality, peace, calm, all of those things are at the core of
Mm.
my being. And I think it's really important to me. And it sort of reflects the way that I live my life, and that, hopefully it reflects the way that I deal with others as well.
Yeah, definitely. I think most people would describe you as very calm person, I guess, and
Mm.
kind. So it makes sense that you make that a daily practice, I guess. And just to dive a bit more into this topic, what were your main influences to start meditating or trying to work on your insight?
Yeah, I think we probably, my wife initially had some exposure to some Aboriginal spiritual practices, and I think that probably led us down that path in a lot of ways. At the moment we have an Aboriginal healer staying with us, for the last few weeks, and it's someone that comes up to Sydney probably a couple of times a year, and often stays with us. So I think that is how it started. But like any journey, it was an entry point, and then you then look at all sorts of opportunities as well, and just different things. Like I can be sitting there, you know, reading Rumi in the evening. You know what I mean? Like which is ancient sort of, I don't know, Zoroastrian mysticism, I guess. You know what I mean? Like so, I'm open to all sorts of things, and you just take a little bit from everything. To be honest, you take what serves you, and if it doesn't, just move on from it.
Nice. Yeah, I also enjoy just sitting with my thoughts, I guess.
Yeah,
So it's interesting. Not a lot of CEOs mention meditation. I don't know if it's because it sounds soft, or is it because they just don't do it. So yeah, it's interesting. And I'm guessing you're not thinking like about, I guess, starting a new business or anything like that, but like, where do you see yourself in 5 years time, and would you still like to be running AF Legal, or does the future hold you something different for you?
yeah. I think in 5 years, I think I'll still be doing what I'm doing now. I think I'll still be calling Pete on a regular basis, and hopefully we're discussing our 100 million plus market cap legal business at that point in time. So that's why I'd like to think that we would be in 5 years' time.
Nice, nice. Okay, okay. And what keeps you awake at night, or what do you fear in general, and why?
Yeah, I think again, this goes back to some of the other stuff that we talked about. But if you do the internal work, I don't, fear is not an issue. Fear is not something that
Mm,
enters your life, and I think that plus, operating from a place of fear is never a good place to operate from. So I think the key for me is you don't let it in. You don't let fear into your life. I think it's really important, and I think the practices and the way that I live my life allow me to do that. And they're I'm gonna, I could say genuinely that I don't have fears. I don't. There's nothing that I fear.
mm. Got it. And what sort of habits have you cultivated in the last, say, 10, 20 years, whatever, that made the most impact in how you deal with others, and also, yeah, how you live your life? I guess
Yeah,
it's
yeah.
it's not
I
common.
I think just like we live on the outskirts of the city, so we live in a fairly natural environment, and I realize that's not possible for everyone, but I do think that if you return to a very calm place, you spend time in nature, whether that's the bush, or whether it's sitting on the beach, whether it's in the water. I think all of those things are very good for the soul. I think they make a real difference, and I think that compare that to a city environment with all of the noise, the activity, the even the radiation and things like that that's sort of rattling around in the air. I think a calm environment makes a big difference for you.
Yeah, definitely. Just today, I went to the beach, and unfortunately, the beach here is freezing cold. Like the water is not like in Australia, so you kind of get that cold shower effect, and you're just sitting there, like watching the waves, and it's great. It's great
It
I
is, yeah.
can resonate with that.
Mm.
Uh, nice. Okay, so switching gears. This is like completely unrelated question, but how often do you check the stock price?
Yeah, I think this is an interesting question because I was talking to one of our top shareholders the other week at a investor presentation. We were talking after it, and a little bit around that whole issue of the fact that our results have improved so much over the last couple of years, but the share price really hasn't. And yeah, he's probably in our top 10 shareholders, this guy. And he
Mm-hmm.
said, don't worry about what you can't control. And in the context of the share price, there's so much around the share price that you can't control. You know,
Mm-hmm.
I can control what I can, and I can trust that will deliver the quality results, and ultimately that will drive the share price at some point. But in the meantime, things will happen. Like our share price a little bit depressed in the last week or so because someone who had about 1% of the company decided to sell it all. You know what I mean? Like, and our
Mm-hmm.
liquidity, our liquidity is such that when someone decides to do that, and who knows what their reasons are, it could be nothing related to us for all we know. That is going to happen. So I would say that I check it perhaps once a week. And in terms of daily or intraday movements, I just think they're a distraction, and I don't look at them.
Mm-hmm. Got it. Got it. Nice. Yeah, I think that's a wrap. Wonderful conversation, and happy to chat with you whenever you have any relevant updates. It was really a pleasure, and thank you so much for this 1 hour.
No, I really enjoyed it, David. Thank you very much for your time and the opportunity to speak. So look forward to hearing back from investors at any point in time on anything that arises from this, and look forward to speaking to you again down the track.